Tesla insurance. How Tesla will crush the industry. This past year, Elon Musk and Tesla have constantly fascinated the world with new and newer innovations, such as the Tesla Cybertruck. There is great excitement about most new Tesla products, but one hugely important one that has been largely overlooked. With far less fanfare and no stage performance by Musk, Tesla started offering car insurance last September. In the long run, this is going to have a major impact on most of our lives, perhaps even greater than Tesla's more eye-catching innovations. Don't forget to watch today's video to the very end to find out how Tesla will crush the industry with its Tesla insurance. Who can get insured? Tesla insurance is currently only available for Tesla vehicles in some states of the US at present. It will expand the number of territories gradually over time. But as with the Tesla Cybertruck, the company first wants to see how the business folds up to whatever is thrown at it and whether it cracks under pressure. For those eligible for Tesla insurance, the company claims to offer premiums 20% to 30% lower than rivals. Yet even if you are in an area where you can request a quote, Tesla won't necessarily make you an offer. It sometimes still refers drivers to a traditional insurance partner instead. It may be that Tesla chooses the clearer, less risky cases and sends more complex ones to insurers with more experience and appetite to handle them. The cost. Most major car insurance providers offer coverage for your Tesla, but since they classify it as a luxury vehicle, they will charge you a high-end premium to match. Research shows that on average, it costs $4,539 per year to insure a Tesla. This cost will depend on the model of your Tesla, your driving history, and how much coverage you choose. Special coverages. All Tesla insurance packages come with a vehicle automation package that includes the following: autonomous vehicle liability. This insures you against damage to property or bodily injury as a result of a collision when your vehicle is an autonomous vehicle mode to the same limits of liability as when you're driving. Cyber identity fraud expense. This covers you against digital identity fraud. Coverage is limited to $15,000 per occurrence and $30,000 per insurance period. Wall charger coverage. This covers your manufacturer-issued electrical power charger if it gets damaged or lost. This coverage is limited to $3,000 and doesn't cover damage that you caused or a factory defect. Electronic key replacement. This covers the loss of your electronic car keys, up to $500 for 2 incidents in each insurance period. Loan/lease gap coverage. This protects you in case your car is stolen or damaged. It will pay the balance of your car lease or loan, based on the value of your car. Kinds of insurance. You'll get an idea of how much your monthly premium will cost after you determine what you need from the different types of coverage available. Coverage types include liability insurance. Liability insurance covers you against injury caused to another person or damage to their property. Teslas are not more dangerous than other vehicles, so you probably won't need more liability coverage than usual. Buy the state minimum and add a little extra to cover medical bills and possible lawsuits that may result from an accident. Personal injury protection. This covers you and your passengers in the case of an accident in your Tesla. It will take care of your medical bills, regardless of who caused the accident. Collision insurance. This covers any damage to your Tesla as a result of a collision. Teslas are made of a more expensive material than other cars, so will be more expensive to repair. Hence, they will cost more to insure against collision. Comprehensive insurance. This covers damage caused to your Tesla by something other than another vehicle. It may also cover the theft of your car. Why is Tesla selling car insurance? For one thing, it has the real-time data from all its drivers' behavior and the performance of its vehicle technology, including camera recordings and sensor readings, so it can estimate the risk of accidents and repair costs accurately. This reliance on data may well mean it never branches into selling insurance to drivers of other manufacturers' cars. At the moment, Tesla is offering insurance premiums calculated with aggregated anonymous data. In future, it could roll out more customized services, like the ones offered by insurers using telematic black boxes, to offer drivers cheaper quotes based on how they actually drive. Every time there is an accident, Tesla has instant access to data about the driver behavior that led to it. One attraction for the company is that it can evaluate how some of its technologies, like autopilot, stability control, anti-theft systems, and bullet-resistant steel, can reduce risk. Another motivation for Tesla is that some insurers charge a relatively high premium for Tesla cars. One reason is that they still don't have much historic information about the cost of repairs of electric vehicles. By vertically integrating insurance into its offering, Tesla brings down the price of owning its products. At the same time, insurance is a barrier to many innovations that Tesla is targeting for the future. With the insurance taken care of, it will be easier to sell self-driving vehicles or send people to Mars, with sister company SpaceX. Like many things Elon Musk does, this both solves a short-term problem and fits the longer-term strategy. It's a little like how Tesla focused on producing luxury vehicles, first to finance the infrastructure for selling cheaper cars like the Tesla Model 3, changing the structure. Tesla has one more reason for offering insurance, which is that the sector is changing. A tech company disrupting it fits the zeitgeist perfectly. Research at Loughborough University has looked into this disruption. It evaluated 32 insurance providers around the world, including Tesla, and found that artificial intelligence, big data, the Internet of Things, blockchain, and edge computing were all rewiring insurance, both literally and metaphorically. Broadly speaking, the work of the insurer is shifting from local human expert underwriters to automation driven by big data and AI. The existing industry players that I'd evaluated essentially fell into three categories. Some had recognized they cannot compete with tech companies. They were focusing on interacting with customers, branding and marketing, while outsourcing everything else to companies with the relevant skills. Other insurers were trying to add new technologies to their existing business model. For instance, some are using chatbots that apply machine learning and natural language processing to offer live customer support. Yet another group had more fully embraced the new technological capabilities. For example, life insurers like Vitality and Bupa now encourage customers to use wearable monitoring devices to offer them guidance on improving their health and avoiding accidents. Importance of your Tesla insurance. Acquiring insurance for your Tesla is an important part of protecting you and your vehicle from any unforeseen circumstances. Getting your Tesla insured is not that different than insuring other vehicles, but there are a few unique options available to Tesla drivers. Alongside all these were the new breed of insurers, with Tesla perhaps the best example. Others include Chinese giants Alibaba and Tencent. Just like Apple and Google are making incursions into banking and finance, these are tech-savvy companies with many existing customers who are adding insurance to their portfolio of services. In every case, the capabilities of AI and big data-driven automation have acted as a catalyst. What this means for drivers. In the short term, Tesla drivers can look forward to insurance that is arguably more seamless and convenient and may well be cheaper, particularly if they clock up fewer miles and drive safely. Drivers should still compare prices with other insurers. The likes of Progressive and Jayco are among those that insure Tesla vehicles. In the longer term, this is a sign that insurance, like banking, road tax, and many services, will be driven by real-time data. It will probably change our behavior for the better. We will probably drive slower, eat healthier food, and exercise more, even if libertarians will be uneasy. This shift will challenge our attitudes towards personal information privacy. Some of us will value the benefits of being open and transparent with our personal information, while others might seek solutions that keep their data with them. Edge computing has potential here, since it allows some data processing to be done on your device, so that your personal data doesn't need to be sent to a central server. And so, Tesla and Elon Musk had not just added another revenue stream to their many successful endeavors. They are also helping to fundamentally change the way that we interact with insurance providers. In the future, insurers will be more like a partner on our journey, both by car and on foot, both on Earth and beyond. With that, we come to the end of today's video. Don't forget to join in the next time for more of such interesting content.